A real estate tax lien certificate. What type of lien is it really? In this video, I'm going to show you the history behind tax lien certificates. This is a lien on the property and what makes these historically one of the best kept secrets on investing in the United States today. Tax liens on a property are like the friend that comes to visit that never seems to want to go away. I'll show you how that works and why they are a superior lien. This is important. At the very end of this video, I'll show you what type of liens to watch out for. Okay, I know I've said in my videos in the past that all other liens and encumbrances are junior, but there are a couple types of liens that will match a tax lien certificate, and it'll make sense once I go over it. So stick around to the end, and I'll show you which ones to watch out for. Okay, let's just talk about basics. Forget about tax liens, tax deeds, all that stuff. What is the purpose of a lien? Okay, the purpose of a lien is on a real piece of property, real estate, piece of property. I can't pick it up and move it. So it's one of the most secure assets that we have as a populace to go ahead and guarantee something. Okay, it could be a financial transaction. It could be a financial transaction external from the property that was promised, and this is guaranteed that that's going to be paid. For instance, a lot of people have heard of mechanics liens. So let's say I've got something that was done on the property and you didn't pay the contractor on it. They can say, hey, you didn't pay us our money, so we're going to put a mechanics lien against the property. Probably one of the lowest forms of liens as far as superiority. In other words, there's going to be a mortgage ahead of that. There's going to be all sorts of things ahead of that. But that's a type of lien. So a lien is a promise of something or a dispute of some sort that says this can't go away until this is resolved. Could be financial or just promissory. Now this is crucial. Liens are ranked in the priority that they were filed. So you're going to hear this as you get into real estate, as you start doing this, is what's the priority of the lien? It really comes down to, and you've heard me here, I just talked about mechanics liens and stuff like that. It's not that they don't have any strength, it's when they were recorded. So when I go out to get a mortgage on a property, the banks spend a lot of money to make sure they're in first position on the property. They want to make sure that my $400,000 that I just lent to the property owner has got first position over anybody else should this loan not be paid. This is over seconds, this is over the mechanics liens, all that. So what they're doing when you're signing that mortgage paperwork, what have you, depending on the state, is they're making sure that as soon as that is done, it's being recorded as a first position lien on the property. So the question bodes because of that is how can a tax lien certificate be in the first position if the mortgage is already filed as a first position lien? That's a great question, and I'm glad you asked. So here it is. Look, there's a lot here. If you've got some questions, just go ahead and type them in the comments in there. I personally answer all those. So let me explain that. A tax lien certificate is an obligation on the property. Property taxes are always due on a property regardless of who owns it. You just don't see them, okay? So when the bank goes and puts their liens on it, they know this. They go, we're going to put a lien, we're in first position. But if you read the mortgage contract with a magnifying glass and all 80 million pages that you're signing in, it says, if you do not pay the property taxes on this and a tax lien certificate is placed on that property, it automatically becomes the first position and jeopardizes the mortgage. So the mortgage company can literally call the mortgage loan or due on clause because you failed to pay your property taxes. Because the mortgage companies know as soon as you don't pay the property taxes, the property tax lien, boop, it pops up and takes a superior position, guaranteeing that the county is always going to get their money. A really simple way to think about this, it's kind of like a phantom lien. Okay, so a tax lien is always on a property. You just don't see it until somebody fails to pay it. Regardless of who's placed a lien and when they placed a lien, the tax lien certificate will automatically show up and take a superior position to everybody, including the IRS. Now, I want you to think about history here, okay? So who controls title on a property? The county does, okay? The county's the one that controls it. They're saying this person's owed, this person owes, and the title companies and the mortgage companies, they all refer to the county. So if the county's owed money, they're going to go, you all can do whatever you want, okay? But this is not going to be a clean title until we are paid. This is what makes tax lien certificates such a superior investment strategy. You are the county. So when I buy the tax lien certificate and they're giving me a tax lien certificate on the property, I've taken their position. That's why it's a superior lien to deeds, mortgage, and the IRS. I mean, think about it. The IRS was formed in what, 1913? They haven't been there forever. That property's been here forever. So that lien's always been there, okay? No matter what they say, boom, it'll pop up over and above that. So let's talk about some of the junior liens that are out there. A federal lien of any type is junior. Now, can the IRS come in and say, we're going to seize this property? Yeah, but they're going to somehow have to satisfy some of the other stuff on there. And the county's going to go, you guys do whatever you want. Let's say you're in the middle of a 3-year redemption period, and this property owner fails to pay their IRS bill, their income tax lien, and the IRS comes in and gets aggressive and takes the property. They can take the property, they can sell it to their heart's content. Whoever buys that will not be given a clear title until the county, that's kind of you right now, is paid their property taxes plus the interest rate. So if you're buying that tax lien certificate and it's paying 18%, watch the party. Y'all can do whatever you want. I'm the county here, and until you pay this lien, this tax lien certificate, nobody's going to get clear title on this. And that's kind of the buyer beware when you go out there. If you're not doing a tax lien certificate or a tax deed, and we'll get to those in other videos, it is buyer beware. When I go into a foreclosure sale, if I go into HOA sale or any of those other types of sale, remember, it is not the superior lien. Okay, it could be first position, but everything else that's attached on that property will go along with it. Tax lien certificates, when I foreclose on it, I am wiping out all other liens and encumbrances regardless of when they were registered on it. So this is a very powerful position. And again, that's not going to change. It will not change. It hasn't changed in over 250, 300 years. This has been around since before we became a country, and it's not going to change now. So let's look at this real quickly. Why do we call this one of the best kept secrets on investing in the United States today? I want you to think about this as an investor that's trying to make big money for their family. You are in a superior position, okay? Not because of who you are, you've just taken over the county's position and they don't even know you're there. It's not like your name's on here and they're going, who is this Jack Snow? He's buying liens on my property. They owe the money to the county. And that's just a nice thing. You don't have to worry about maintenance. You don't have to worry about that. I'm getting 18%. I'm getting 20%. I'm getting 25% on my money, regardless of what happens in the market out there. Now, let me tell you what liens you have to be watching out for. I told you I'd say this, okay? This is huge. Guess what lien the county won't wipe out? Think about that for a minute. Who controls the title on the property? The county. So if the county's owed money, maybe they had to do a lawn mowing, or maybe they had to demolish a property, maybe there's some kind of ad valorem, some kind of a taxes or something that's owed on that property that's not part of the property tax lien, they're again the one that controls the lien on the property or the title of the property. So they'll say, you bought the tax lien, but there was these other maintenance liens on the property that's owed to the county. So the only thing that will not be wiped out is something else that's owed to the county, but you'll know that going in, and we'll show you how in other videos. In fact, right now there's a lot of information. If you like this information, you want more, I'm super proud of this. I've got a brand new training that I've just put into a bottle. We're talking 30 years of really cool information and put it in there. I know I don't look 30, but I'm over 30 years old. So I've been working on this since I was 1 year old. Just go to Higgins Method, HIGGINS.com. Click on that link and I'll give you free access to this new training on it. Be careful out there. God bless, and we'll see you on the next one.